Anyway, thank you for coming to this Fireside Chat. This is actually my first. My name is Chris Merck, and I'm the Interim Executive Director of BL China. We have these in the Beerworth room. I don't know how many of you know who John Beerworth is. He recently passed away. He was the CEO of the Grumman Corporation and the chairman of our board of trustees at one point, and a very strong supporter. So it's really satisfying to have one of these fireside chats be about the business world, and particularly about equipment finance, because Grumman buys a lot of equipment and sold a lot too. We welcome Michael Barrett, who is a Senior Managing Director at GE Capital, based in Dallas, Texas, but with long experience in business development, M&A, new relationships development for the equipment finance business at GE Capital, and long experience in China. He was formerly the chairman of GE Money in China, which is a consumer finance business. He chaired the GE Finance Company China, and he also chaired GE Management Technology Consulting China, and was a board member of the American Chamber of Commerce in China for 2 years. So he's been involved both as a representative of the business community talking to the Chinese and U.S. government, and also as someone with direct responsibility for some important financial services businesses. GE as a company and as a firm is one of the most ambitious and one of the most successful multinationals operating in the Chinese market. They have achieved extraordinary scale and success in their medical device business. They've been very creative in terms of the relationships they've established, joint ventures with in avionics and others, and have put a huge amount of effort into developing personal relationships through training senior executives of state-owned enterprises and other large companies in China. So in many ways, GE represents best practices in terms of how to succeed in the Chinese market. So we're happy to have Michael here, who's going to talk about the banking market, his experience, lessons learned, and how foreign companies can succeed. Please.
Well, Chris, thank you very much, and thank you everyone for attending, and I'm looking forward to the discussion. And as Chris mentioned, I lived in China for over 5 years, and when I was there, my responsibilities were to really start up the financial services arm of GE Capital there. So what I'd like to do is at least to share with you some thoughts around the overall financial services market, what foreign banks are doing from a strategy perspective, some of the challenges, some of the opportunities, and some of the lessons learned as a result of my time there and experiences over the last 10 years or so. I've got a presentation with a couple of different slides just to go through some data points for us, and again, welcome the conversation and look forward to a robust and rich discussion. So if you don't mind, I'd like to just stand while I go through the pages here. So just in general around the market overview, if you look at China today, you've heard recently that they're looking at around 7% GDP growth, which is really, from an overall last decade or so, that GDP growth number has actually gone down relative to what typically has been in the 10 to 12%. And you can see here on a forecasted basis, if you look at 2014 at 7.4%, hovering around 7% all the way out to 2018. As a result of that, there are a number of different reforms that are underway, and we'll highlight some of those in the next couple of minutes here. But obviously, from an overall growth perspective, China continues to grow. The economy continues to show a lot of resiliency. It's going to be predicted to be the largest economy in the world by 2019. So from an overall perspective of where you want to be from a growth perspective and from a business perspective, China is definitely one of the target locations around the world. From the middle class perspective, there's a lot of things happening there. Clearly, there's a lot of consumption growth. If you think about what the government is trying to do today around trying to really drive domestic consumption, trying to really make sure the middle class has the ability, that buying power, you can see that one of the bigger things that are happening is this migration. There are a lot of people that are migrating from Tier 3 cities to Tier 2 cities and Tier 2 cities to Tier 1 cities. And here's a stat: around 56% in 2015 will be estimated, and then up to by 2030, 69% of the population becoming more urbanized. So people moving from their traditional small towns, small villages, to these larger cities. And if you think about cities like Chongqing, or think about cities like Chengdu on the western part of China, 25, 28 million people in terms of population. So that is showing a significant amount of growth. The other piece of it is just in terms of the overall middle class is growing. And you take a look at 28% in 2005, and that then becomes up to 79% over the years. So again, you're seeing a big amount of growth in terms of how we define the middle class versus what the traditional class has been in the past. I mentioned before, government reforms continue to be expected to help to unleash and drive that potential growth. And you see here some of the financial reform. Interest rate, capital account liberalization. There's piloting of 5 new private bank licenses. So there's a number of things that are underway relative to the CBRC, the China Banking Regulatory Commission, really trying to make sure that there's a way for companies to grow. There's things that are going on relative to market reform, the Shanghai Free Trade Zone, the ability for companies to come in there and pilot things under a regime that allows for the innovation to kind of take place. In addition, you've got the whole rural land ownership. You've got continued stronger IP protection. When I was there, certainly a number of companies had expressed concerns around intellectual property. And that continues to be a concern, but you can see that the government continues to try and make strides there to improve the protection, to ensure that that can help unleash the innovation. In terms of population reform, around the one-child policy, those things are trying to be relaxed. Things like the hukou system, which traditionally have kind of stifled the ability for people to move and migrate as much, that's now under reform as well. So overall, things are continuing to change. And Chris mentioned my experience there from the last decade to where we are today. Things have been migrating and moving around, and obviously, Chris, your experience of 17 years, you've seen it as well. So quite exciting times there in China. When you take a look at the macro concerns and observations, so high overall leverage, the total debt GDP increased from 142% in 2005 to 188% in 2013. So ultimately, you've got the government that's really concerned about that. You look at local government debt, there's some concern about whether local governments have the ability to really repay that local government financing vehicle. So there's some concern relative to the amount of growth and how that is relative to debt as it relates to that. The real estate bubble. We've heard for years, can people afford, young people, can they afford to really go out and buy in these apartments today? A lot of people have been buying on speculation. The government's been trying to really contain that and put in strict rules relative to having to be owner-occupied when you actually move into these apartments. So again, trying to really stem some of that. Private sector continues to grow in the global space, improving quality in order to compete. What we're finding from a business perspective is a lot of the large Chinese manufacturing companies, where are they seeing the growth? The growth for them is going outside of China. Now, they're creating a global presence, a global footprint. They're trying to expand into the US, into Europe, into Australia, into markets where they can get their brand and really try and make a difference from a growth perspective. As a result of that, you've got to make sure that the quality is there. So they're picking up their game in order to compete. And then obviously, again, the government focusing on domestic consumption as exports decline. If you go to Guangdong province, which typically has been the haven for where a lot of apparel and textile and other types of manufacturing, today you're seeing that area isn't as robust as it used to be 5 to 10 years ago. There's a lot of competition from other parts of Asia from a labor cost perspective that's really trying to put pressure on overall on the domestic ability for companies to really export. So as a result of that, what you're seeing is the government is now taking steps to really try and drive more of its growth inside of China as opposed to relying on exports. So let's talk about foreign banks in China. So, there's a lot of activity that continues to grow. As you can imagine, the banking industry is a very competitive environment in China. It's one where a lot of foreign players have looked at it and say, if we want to grow, we're going to try and grow in China. But as a result of that, you've got to have a strategy, and you've got to have multiple-pronged strategy. If you try to have just one strategy, you're probably going to find that you're going to come into obstacles down the road. So you've got to think about that pronged approach, multi-pronged approach. Today, there are 400 plus financial institutions, foreign financial institutions in mainland China. They have various different types of degrees of licenses. Some of them are foreign incorporated. Some of them have representative offices. Some of them have subsidiaries. Some of them have specific branches. The foreign banks today are in 69 cities of the 27 provinces. So again, they're trying to make that overall footprint into China, but it also takes a lot of time, it takes a lot of effort, and I'm going to go through some of the challenges and some of the opportunities in the next couple slides here. When you take a look at the growth has slowed for foreign banks from 7.66% in 2013 from what was 10.66% in 2012, and there's a couple different factors that's driving that. We'll talk more about that. Locally incorporated banks. I mean, clearly that's one of the big goals for a number of the different foreign institutions as they come into mainland China is how do they become locally incorporated, because that then opens up the ability from a licensing perspective for them to have the ability to launch products, get access to the consumer base, the ability to really understand the repayment channels, leverage the local credit bureaus and things like that. So you can see here on some of the charts that I've got here on the pages, you can see the growth in the bank assets, and typically you've seen some of the local state-owned banks which continue to grow. I mean, they've got a significant presence there, some that have upwards to 30,000 branch locations. But in the top sliver you can see the foreign banks, and they're making their way, but it's really a slow, methodical approach to driving growth and entering into the marketplace if you're a foreign bank. And on the next specific graph here, you can see some of the profits. And you can see here at the bottom, foreign banks today and where they are in terms of their overall profitability relative to some of the larger banks, whether those are large commercial banks, joint stock banks, or city commercial banks. So let's talk a little bit about consumer financing. So again, now shifting gears and talking more specifically about the consumers and providing financial service products for consumers in China. As a result of that, the market share for that is very small relative for foreign banks today. It's about 1.7%. And there are some key drivers as to why that is such a small number. When you take a look at the partnership strategy, back in the mid-2000s, one of the approaches for foreign banks was to enter China by creating these partnerships with local banks. What you had, though, is you had a cap, 20% for any foreign bank as a single investor, and as a result of that. And as a result of that, it really created a slow, methodical approach to grow. And it limited what banks could do in terms of foreign banks could do because of that cap. And but it became one way to at least enter the marketplace. Now, the whole thought process around entering by creating that kind of 20% or shareholding position was really welcomed at the time by the Chinese Banking Regulatory Commission, because it really brought a kind of an opportunity for a lot of the local banks to learn from foreign banks around risk management, corporate governance, product development, so IT, so a lot of some of the skill sets that they didn't necessarily have back then, they were welcomed as part of this cooperation that could happen as part of these investments. And then the other side for the foreign banks was that gave the foreign banks the opportunity to get access to the customer base, to be able to distribute products, to learn the marketplace, and ultimately be able to hopefully share in some of the profits from launching those products in conjunction with these local banking partners. But it continued to be a slow, methodical approach. But there's been recent regulatory announcements, as recently as fourth quarter of last year, again trying to ease the ability for foreign banks to really try and increase their share from the 1.7%. You can see here, the deposit investment schemes have been announced. They've also been easing of rules relative to foreign banks and servicing RMB license products. So the market continues to evolve, and that's one of the key messages that I would say here is that, yes, great opportunities in China for foreign banks, but the market continues to evolve. There's a need to be flexible. There's a need to understand that you've got to have a long-term view as it relates to thinking about the model and being able to think through how do you have multiple strategies such that you can ensure that if one does not work, then you still have the others to rely upon. So some specifics around challenges. And this is just kind of a footprint of kind of the current retail banks for some of the big 6 retail banks in China that are foreign banks. And you can see here primarily along the seaboard, but they are in the big tier 1 cities, Beijing, Shanghai, Guangdong province, where you've got Guangzhou and Shenzhen. What you see here is you don't really see a lot in the mid part of China, and certainly as you head west, you're seeing some in Chengdu, Sichuan province, and you see some in Chongqing. And I think the strategy has been, let's look at pockets where we can at least establish a footprint, get access to customers that are more financially savvy in some of these tier 1 cities or tier 2 cities that are up-and-comers that have actual scale in terms of access to customers. Now, when you take a look at some of these big 6 retail banks that are foreign banks, we're talking about the HSBCs, the Standard Charters, the Citibanks, the banks that have been around for a long time in China and that are dedicated to it and committed to it. As I mentioned before, the regulations continue to evolve. As a result of that, licensing, capital requirements have been traditionally limited foreign banks' ability to grow. Years ago, there was a cap on the number of branches you could open. There was a significant amount of money that you'd have to put in to establish a representative office and then registered capital to establish branches. So again, there was this slow approach to try and build out your business model. Scale, limited physical distribution, especially in Western regions versus local banks and the branch footprint. When you think about the state-owned banks, the Bank of China, the Agricultural Bank of China, ICBC, you're talking about banks that have got multiple branches within a 1-mile radius. And when you're talking about some of the foreign banks, you're talking 1 branch, 2 branches within a specific city. So the ability from a footprint distribution perspective is a challenge. You've got some banks that have 25 to 30 to 35,000 branch locations versus foreign banks that may have up to 100. And if you're a consumer and the payment model is not as robust as it is, you have to go into a bank to make a payment, or you go into a bank to do a lot of your transactions. So you need to have a bank that actually has a physical presence. Now it's evolving with the whole technology around mobile banking, obviously the things that are happening with Alibaba and others around ePay, those become other vehicles to leverage in the future, but it's still really evolving and it's an early adopter process that's undergoing. Big data. One of the challenges has been in the past is access to robust information. When you take a look at markets like the US, we have a very robust credit bureaus. We can go in and you can go to your local retail shop and you can provide them with 3 or 4 pieces of information, and they have the ability to go and pre-screen you. As a result of that, they can go and hit up against multiple credit bureaus and get information. That has been historically a challenge. Now there's a lot of work underway where they're trying to really establish ability to get access to good data and use that data to help make good credit decisions. But it has been a limiting factor. So what's happened is you've got people that are going on doing risk management by really manual underwriting, trying to get access to financial data, understanding what's really accurate, and then being able to try and make credit decisions. That, again, continues to be an evolving issue. Human capital, recruiting and retaining talent. I would say here one of the biggest challenges has been the ability to bring in talent, recruit, retain that talent. What you'll oftentimes have is you can invest in people that you want to really become the future leaders of certain functions within your business, but then what ultimately may happen is that they get recruited away from another company. And that becomes a real challenge in the banking industry because sometimes you can be so single point sensitive as it relates to those subject matter experts that really are key to keeping that business model really going in terms of the strategy. So those have been some of the challenges that the foreign banks have been plagued with over the last several years, but they're continuing to try and evolve and work through that. So let's talk about some of the opportunities. As I've seen some of these recent regulations that have been going on, there's been a number of discussions in the Beijing looking at how do we try and understand where is the real growth opportunity for foreign banks and what can we do. So ease of doing business, the waiting period, they've eliminated foreign banks can now open their first branch office faster. There was a typical 2 to 3 year waiting period process. Now, with continued efforts, it's now been evolved that you can do that at a much faster pace. The capital restrictions have been removed for foreign banks and the margins have been improving. So again, as mentioned before, registered capital had always been kind of one of the ways to kind of slow that process in terms of the ability for banks to grow very quickly. Now they're starting to ease those regulations that allow for that. Product expansion. Application time to conduct R&B business. There were a number of foreign banks that had continued to want to evolve in China by really offering local products in local currency, and that became a challenge for a long period of time because there's a waiting period. You could, first you open your rep office, then you'd apply to get your local license. After you got your local license, you then have to apply to launch your products. Then once you launch your products could probably be in a foreign currency, US dollar, and now you then have to wait to then launch an RMB. That process has continued to evolve and making it much easier now for foreign banks. Loan products and acceptable products and mobile banking technology, I think, clearly consumers, when they think about banking and financing, typically it would be, I'm going to borrow money, I'm going to borrow money from my family, I'm going to borrow money from my friends, I'm not going to go borrow money from a bank. Now that's continuing to evolve as you've seen the government try and really create more of a discussion around driving domestic consumption. And as a result of that, it's now okay to borrow money from a bank. But clearly that has been, trying to overcome that cultural mindset. The other key piece of it is going to be that there are differences amongst China. People think that you can come in and have one China strategy and it is applicable for all parts of China, and that's not the case. What you may market to customers in Beijing is not going to necessarily work to customers in Chongqing or in Kunming. So you have to think about that strategy and say, I can't build one product to satisfy all parts of China because the customers have a different perspective. They have different awareness of what products are. I recall when we launched several products back then in the 2009, 2008 period, what we did is we really spent some time educating customers on even as simple as how you go about repaying your bills, what your obligations are on a monthly basis, and really try to do that. We did that primarily for Tier 2, Tier 3 cities, whereas in Tier 1 like Shanghai, Beijing, we didn't necessarily think that became an issue, so we didn't think about it as much in terms of how we'd market to those types of customers. But we did market to the customers in Tier 1 cities like Shanghai and Beijing differently. We talked a lot more about why the power of financing and how that can help you from a cash allocation perspective and how you can borrow and use that money, increasing your buying power, because we felt that there were different stages of development as it relates to the ability to understand consumer financing. And then the overall growing consumer market, so big data is improving. 8 companies are recently approved to start the development of credit bureaus and start helping to really aggregate that data and then be able to help the companies and the banks have good risk models to help make decisions. So all those things will make it more and more important from an overall improvement perspective. And sales finance. Sales finance continues to grow. Consumers are becoming more sophisticated. So you can see here on the right-hand side some of the retail products that are in demand for the future. Clearly mobile banking, private banking, wealth management, investment products. To a smaller extent, credit cards, proprietary cards like your retail credit cards, and then mortgages, again, are some of the specific types of products from a consumer perspective. So, lessons learned, and again, these are built up over time from an overall consumer perspective, the strategy. A standalone or to grow footprint, or do you go with a local partner? There are trade-offs with both of them. What you've seen over time is that banks typically came in the mid-2000s, and they came in and said, we're going to partner with a bank, take a 20% stake, and use that. But what happened is that really limits your ability to really have control. Because at the end of the day, you're capped at 20%, and you really are reliant upon the main shareholder in terms of what you want to do from a strategy perspective. But it gets a foot in the door. But again, you have to think about, is that going to be your entry strategy? Or do you want to go it alone? If you go it alone, you've got to establish your rep office, you've got to get your license in, it's now being eased, but what happens is it's a smaller, slower process, but you control your own destiny, so to speak. So you've got to think about that strategy. Creating partnerships and JVs, they're important, but there also are challenges with that as well. Over time, are your objectives going to be aligned? you've got to continually ask yourself that question. What's going to be your exit strategy? How do you make sure that you protect your IP? All those kind of those things come as it relates to that. So there are specific pros and cons to each approach. The value proposition. Again, what is a value proposition that's going to resonate with your customer base? And recognizing that there's multiple customers within the overall market in mainland China, so one product, one strategy does not fit all. There's those differences between tier 1s and the other tier 2, tier 3 cities. Brand equity in China. You know, what's interesting here is that that depending upon industries can work and not work. So in the case of the brand, do consumers find confidence in a foreign direct bank? Do they feel like their money is going to be protected? Do they feel like their investment products are going to be well maintained? Or do they think that they're better off going with a local bank because they've got more distribution, more footprint, more long-term viability in the marketplace? So those are the kind of things that you have to think through in terms of your branding approach and what the viability may be. From a product's perspective, you know, if there's a niche product out there, one of the things we learned is that continue to try and develop that. You know, drop multiple products or plant multiple flags and test and learn has been the approach that we've taken. Because again, if one aspect or one product hits a roadblock, then you have other products at the same time that you can then rely upon, so that you're not just going with one strategy. The big data analytics, as I mentioned before, you know, as social media continues to grow, more consumer data will be available for product development. Innovation, there's clearly a lot of opportunities from an innovation perspective. How do you leverage data and analytics to help drive that innovation? How do you leverage data and analytics to help kind of create your business case? Is an important aspect of it. Commitment. You know, as I think about it, clearly one of the critical aspects is that long-term commitment to China. So when you think about some of the strategies that have happened over time, where companies will go into China, they may hit a rough patch, and they end up leaving China, trying to get back in becomes that more difficult. Because what you've got is a lot of concern about, well, how committed is the company relative to staying here through good times and hard times. And the other part of it is going to be the ability to have that dialogue with the leadership of the company and express that, you know, the growth metrics and how you think about this business model is different from a mature market. If you try to compare them on the same level, you're going to always have a struggle in terms of the ability to prove the business case. And then developing local talent. Again, high turnover has been a challenge. Trying to find good people, invest in them, build them, develop succession plans has been challenges over time. What companies have got to do is really find that magic approach, which is how do you kind of create an environment where employees feel like they can be challenged, they can grow, they can be rewarded, they can be promoted, all those aspects, and provide them with things that they necessarily can't get in other companies that hopefully will be able to kind of create that stickiness with an employee to want to stay and build a long-term career in one location. So those are some lessons learned, Chris and audience. And again, thank you for the time, and I welcome questions that you have relative to the banking market.
Great. That was very interesting. I actually have a lot of questions. So let me start by asking a couple of them,
Sure.
And then we'll turn to the rest of you. So be thinking about what you might want to ask Michael. You know, one of the things that is always interesting to a banker if you're in a lending business is how you're going to fund yourself. And if you operate on a banking platform, you can take deposits from consumers or deposits through the interbank market or corporate deposits or something like that. If you're operating on a finance company platform, you're in more wholesale banking sources. So in terms of the Chinese market, and in particular GE Money, what was your platform and how are you funding yourself? And what are the prospects for, if you put products out there, they sort of grow very rapidly, could your funding grow with it to support it?
Well, fine. I mean, great question. And there are multiple funding strategies. So obviously, to your point, we've got a corporate strategy group, a corporate treasury group that will help to fund some of that growth. But clearly, the ability to get access to the local market is important. The ability to have local banking partners where you can help to fund that growth. But in the past, that's been utilizing that as one vehicle. You mentioned before that other companies like GE have the ability to take profits that they may have from other business entities that are in that country and leverage that, cross-leverage that for some of the other businesses to support that growth.
So you could fund it through a holding company of GE, so you make a lot of money in medical devices and it can be used partially to fund what you're doing on the finance
Somewhat,
side.
yes, yes.
Okay. Talk a little bit about how you think about the GE brand in China. Because GE Money is a brand in itself, as is GE Equipment Finance, as is GE Medical Devices. The company is enormously successful and well known as an industrial company across a range of products. Does that spill over for you, or do you think about ways in which that credibility can be applied to the consumer finance business, or do you assume, well, maybe consumers don't know about turbines and medical devices and we have to go out and build something on our own?
Well, absolutely. I mean, what we want to do and what we've seen that companies that have been successful is really trying to leverage the power of the brands and products that companies know. So if you take a look, for example, if you've got a strong healthcare business or a strong energy business, do you have a financial services platform and strategy that aligns with that? Is there some sort of the ability to vertically finance within that? And that creates the ability for us to have the synergies around launching a healthcare business and then also having a healthcare financial services business which is aligned to that. Similarly, we're doing the exact same thing in aircraft engines, and having a leasing business from an aircraft leasing perspective. So one of the things is, how do you look at your GE capital strategy, or how do you look at your financing strategy, and is it vertically aligned with your industrial segment? And then you can then leverage that brand and that product and that access to customers.
Okay, so that's working for you in China.
Yes.
How about partnership issues? Where do you come down now? I mean, you set out very clearly the pros and cons of doing a joint venture. You can get help of different kinds in distribution or market access or sometimes other kinds of things. One of the most striking things about GE is that you have been willing to do global joint ventures with Chinese partners that were not only aimed at the Chinese market, but were aimed quite broadly at a global market. How's that working out?
You know, you mentioned earlier at the onset the importance of partners and the importance in developing relationships, and we believe that strongly. So when we enter markets, whether it's China or other parts of the world that we don't have a presence in, we're going to look for a local partner that we know that has access to customers, understands the landscape, has the right requisite licenses and things like that. And we look at that, and are there synergies in the ability to partner with someone to locally to do those kind of things. Now again, we recognize that a number of these partnerships also come with the ability to think through, are your goals aligned? Are you going to have the right strategy long term? So we think through that process, and there's an integration, there's a partnership model that goes in place. Some of them work, some of them don't work, but clearly it's an approach that we've taken, and it's an approach that a number of other companies have taken. And actually the way that you think about it, you know, back in the mid-2000s, that was the predominant approach that companies took that were new to the marketplace. A lot of the regulatory bodies or ministries within Beijing were actually recommending that companies do that, as they wanted to go in and talk about entering China in a specific industry. It didn't have to just be banking, it could be in any industry. And it was always a recommendation that, you know, if you really want to grow, here's a company locally that we recommend that you have a conversation with, and try to think about how could you create some sort of partnership model to launch products in that marketplace.
Those are sometimes very powerful recommendations.
Yes.
Questions from our audience? What do you think about? Yes, sir.
I'm wondering how centralized is the regulation in the banking industry in China, and what problems does that present? And also the political problem of, I guess, worrying about what the party will do at some point as far as changing directions. And my last question is the corruption issue, which has gotten tremendous amounts of publicity. I'm not sure that's what you meant when you talked about going talk to the local company, but that's what seemed one of the things that has evolved, is the necessity of going with the local company, and all of a sudden the president of the local company's kid gets a hell of a job with GE and whatever, things like that. What problems does that present, and how have you gotten around those?
So a couple of things. Number one, on your first question about local, city, provincial versus Beijing in terms of establishing rules and regulations. You know, in the banking industry, the CBRC, or the China Banking Regulatory Commission, they've tried to keep it very centralized in the ability to create policy. There have been the ability to launch pilot programs or free trade zones like in Shanghai, or economic development zones like in Tianjin, which allow for those local municipalities to have the ability to do certain things on their own, and they do it on a pilot basis, and they try to keep it controlled so they can see how it performs, and if it performs well, then maybe there's the ability to expand that. So that approach works, and clearly when you are, when you're in your local city, municipality, you have a conversation, you have a discussion with both the local entity around what you want to do from launching new products or establishing your business model there, and you also go back to headquarters or Beijing to have that same discussion. What you really don't want to try and do is you don't want to go to just one location and think that you've got it solved. You've got to call on multiple stakeholders to ensure that you've got the compliance in terms of the ability to move forward. And then to your second question around, you know, find a local partner. You know, it's more so when I think about it, and Chris jumped in on this, but when I think about it, it was go find a local partner because they want, when I say they, the government or the regulatory commission wanted their local companies to really learn, to really understand, for example, how do you develop the right risk models? How do you develop the right compliance or corporate governance? So what they had to offer was the ability to, here's a company that you can go take an investment in, and that you can get access to customers, you can quickly get access to a license, you can get access to the branch network, and that's a route for you to take if you want to enter China. But as a result of that, the quid pro quo is we'd like you to spend some time in that company and really share with them best practices, share with them how do you develop corporate governance, have people talk through that, and then that really creates an exchange of what this partnership looks like.
Is it possible if you do something like that, you can only go in for 20%?
In the banking industry,
Yeah.
it's capped at 20%.
Right.
Not the other industries, the banking industry. So do you then, if you're in for that 20% with the company, can you then create a separate company that you have 100% control, or are you stuck with sort of working with the local?
No, you can have multiple strategies. So you could go in and you could have 20% in the local bank, and then in parallel, you could create your own application to apply for an RMB license as a foreign bank, and that's another strategy. So if you look at in the past,
But you can do it both.
yes, if you look at the past, Standard Chartered Bank has had multiple relationships with Chinese banks, but then they also had their own standalone strategy. They did that as an approach. HSBC did the exact same thing. They would partner with like Bank of Communications. Citibank did the exact same thing. So there are a number of banks out there that have multiple strategies to try and understand and grow in the marketplace.
I'll add a couple of comments to that. On the corruption issue, I worked in the banking business and then in the consulting business for a number of years, and I found very little direct problem in those industries. Where you find that foreign firms get entangled in Foreign Corrupt Practices Act investigations, it's almost always from the U.S. end rather than from the Chinese end. And it's almost always in a situation where you're selling into a market that has a very few number of buyers. So for example, if you're selling into telecom equipment, there are only a limited number of state-owned enterprises that buy those things. And the people who are making the buying decisions are not terribly well paid, and you know, they would like to come on a junket to the United States and visit Las Vegas as well as your factory. And so there is a gray area there that you have to manage, and some companies have found that that gets them into trouble under U.S. law. Not so much under Chinese law. The foreign firms have not been very much involved in the kind of corruption that is making headlines now in China. That's an intramural game primarily. And then I wanted to add a comment on centralization of regulation. I used to be the independent director of J.P. Morgan's locally incorporated bank, which is called J.P. Morgan Chase China Company Limited, which had a headquarters in Beijing and 7 branches in major cities around China. And one of the things that drove us crazy, all of it's a bank, right? So they're all regulated by the China Bank Regulatory Commission, which has branches in every city where we have a branch. And each branch in Beijing and Shanghai, whatever, CBRC, sets its own regulatory requirements for what you have to do to know your customer if you open a new banking account. So if you walk into a bank branch in Beijing or Shanghai or Chengdu or Tianjin or whatever, you get a form, you have to fill out certain information, you have to do certain things. We had branches in 8 cities. In all of them, they were different. Not one was consistent with any of the others, even though they're in the same, theoretically, the same regulatory network. In Shanghai, they wanted people to videotape the person who opened the account. That was not a requirement in the other city, and so forth and so on. Which means that your internal compliance staff have a very difficult problem in terms of training new staff, and your auditors have a problem in terms of checking to see if you've done it properly, because it's very, very decentralized and local. And so we were constantly asking CBRC to work on the problem of regulatory consistency.
Did they listen?
Well, over time, it's moving in that direction, but it's challenging for them. It's a very big country, and their branches tended to operate quite independently of Beijing, except on matters of very general policy.
I would imagine as the other cities get bigger and more important, they will have to have some kind of consistency.
Well, Shanghai doesn't feel it has to listen to anybody.
Something like New York.
You mentioned the inconsistencies, and I feel that when I go back to China today. I opened up a banking account in Shanghai, and I go to Beijing or I go to Shenzhen, and I want to do my banking, and I tell them, here's my card, and they can look up my account. I say, sir, you have a Shanghai, you open up your account in Shanghai. And I said, I understand, but it's the same branch or same company bank. And they said, well, you have to go back to Shanghai to get some of those services. But if you want to open up a local account here
in our branch,
we're happy to facilitate whatever you want to do once you do that. And I struggle with that. I struggle with the fact that here's a bank that's got the same name, just different branch locations, and we've got the differences in terms of what you can do from one branch to the other. So that's as recently as a couple of months ago.
Yeah. Whereas I walked down to the Chase branch here and pulled out, the same ATM card I used throughout the country and got money. That's trickier in China so far. It's developing rapidly, but it's still an issue.
Yes.
I had a couple of questions. Fantastic. This is marvelous. First of all, if there's one thing that you think is the most important thing, or 2 things that you've learned about this situation, what would it be? And that's the first question. Second of all, have you found a big difference, or is it all the same if you do banking in Hong Kong versus Taiwan versus the mainland? You've explained differences about, like with Shanghai and the different 1, 2, and 3 tiers and all that.
Mm-hmm.
And also, for the how can I say it? For the person who is on the entering situation, for a person who's just beginning, is there something that you have learned that you feel is very important for a beginner, for someone who's beginning, who's entering, not to make a certain mistake or not to do a certain error, or something that you think if you knew ahead of time it would have just made everything much easier and much smoother?
So a lot of good questions there. Let's start first with key lessons learned. I would say, as I think about it, one of them is going to be having a multiple-pronged approach. I think if you think about entering China and you want a successful business model, and you say, I'm going to do it this way, I think you've got to open up your eyes and have a much broader perspective, because there are going to be obstacles and traps along the way, and the question is going to be, how quickly can you overcome those traps and not be immobilized by it? So that's one aspect of a key lesson learned. So back to the gentleman's other question, which was, if you put in an equity stake in a local bank, is that your only approach? The answer is no. You want to have multiple approaches. The other aspect, the other thing learned is this commitment to the marketplace. Chris mentioned before the fact that some of the most successful businesses in China have been around for a long time, and they developed relationships with key people in the government and the ministries, and as a result of that, they're committed to China, and they've been able to display that in terms of their involvement and what they're doing to help drive development of people and investment in local cities and communities, hiring talented people and bringing people off the campuses and giving them jobs. Those all play into the role of you being a great corporate citizen as it relates to your commitment to China. So those would be the key lessons learned there. In terms of banking, Hong Kong, Taiwan versus mainland China, there are differences. If you look, for example, if you're a Hong Kong bank and you want to enter into mainland China, you have certain restrictions as well that have been put on you. Certainly they are deemed foreign banks, but they have less of those restrictions versus those that are full foreign banks from, let's say, Europe or U.S. But there are differences, and then obviously, as you take your card, you take your ATM card and you go into Hong Kong. If they have a branch there, you may be able to get access to money, obviously in local currency. There may be fees associated with that if you're going into another branch in Hong Kong or Taiwan as well. So there are strategies you have to think through in terms of that. But there are companies like HSBC, BEA, Standard Chartered that have got big presence in Hong Kong, and that they've been able to have a successful long-term strategy in mainland China and done well, and they're able to do that. In terms of someone that's new coming into the overall environment and trying to really kind of hit the ground running, I think one of the things is probably flexibility. And what I mean by that is, you're going to have ups and downs. You're going to have challenges. You're going to have all kinds of things coming at you, and both on the business side and also on the professional, on the personal side. And I think being able to recognize that you're going to have a lot of good days and a lot of challenging days. And then how do you withstand that? How do you make sure that you're battle hardened to stay the course? I think that's an important quality or trait to have as you try to think about entering into the marketplace.
Certainly from a regulatory point of view and also from a point of view of client preferences, the market is changing and evolving very rapidly. So part of that flexibility is being able to adjust to new circumstances.
I have two questions. So you talked about human capital being a large or a big challenge. Is it possibly because, are you importing employees domestically from the U.S. to work in GE in China, or are you looking for foreign employees to work domestically in your company, but obviously for an international company?
One of the things that we've tried to do is really hire locally. We believe strongly that getting local talent is where the future leadership of the business will be, the future leadership of that business. So, and because they'll know the language, they'll know the culture, they'll have the relationships, so all those things matter. But when you're starting out a business, a greenfield operation, entering a new market, you bring in people from around the world that may have a certain skill set, and they're there for a short period of time, call it 2 to 3 years, and one of their objectives while they're there is not only building the business model, executing the strategy, but it's also trying to find your backfill. It's trying to go out there and recruit talent to bring into the company so that when you move on and go to your next assignment or go back to your home country, you've been able to grow and develop local talent that can step in and be able to take on leadership roles in that division.
And what was your most unexpected challenge when you first ventured out there?
Most unexpected challenge? It's just the ability to, let's take repayment channels, for example. If you come from a market where you could do a lot of phone banking or you could pay everything online, all that technology wasn't there when I first got there. You had to basically go take, cash and bring it to the bank branch and make your payment, and that's the way you did it. And when you went to the bank branch, it's very long lines, and it took a long and tedious process. But that has, again, it's evolved, with respect to technology and development of software and things like that, and the online banking environment. So all those things have come together. But as you can imagine, very much a cash-driven environment years ago were probably one of the big surprises or one of the biggest obstacles to try and overcome.
Yes.
Yeah, I have two questions. The first question is about internet finance. As you mentioned, companies like Alibaba, they're already applying for a license to enter the banking industry. So I'm wondering, do you think those internet financial companies, they would be strong competitors or even game changers of the industry? And my second question is about social responsible investing. I'm wondering, when making investing decisions, would those social and environmental concerns really something investors pay attention to, or just something like a concept or a checkbox you want to show people you are a corporate citizen?
Right. So let's talk about the last question. This social responsibility as a lender, and we have a perspective. I have a perspective that you've got to be socially conscious about that. You've got to be able to educate people about what they're doing when they're making those decisions. Let them understand, for example, in full disclosure, if you take a loan, here's what the interest rate is, here's what the applicable interest charges are going to be over the term of the loan. Here's the impact in terms of what it has on your credit ratings and things like that. So I think we as responsible lenders have to educate consumers about that, and then let them make a buying decision in terms of whether or not they want to take on that loan or that responsibility. But clearly, as you think about it, entering into the marketplace and just starting out, one of the aspects is how do you drive education and awareness of what you're doing. Because you don't want to potentially be in a position where you're going out and launching these products and you're putting obligations on consumers. They don't really have a good understanding of what they're signing up for. So as a responsible lender, you should take on that responsibility and not just be, a check the box, so to speak. As it relates to internet banking, absolutely. I think clearly it creates opportunities to drive more awareness around the banking industry, but it also creates opportunities to evolve in terms of leveraging technology, and it also helps in terms of, if you saw before, where some of the foreign banks don't have that footprint, that distribution to compete against the historically very large state-owned enterprise banks, they're never going to catch up to a Bank of China in branches. It's just impossible. Yeah. So if you have the ability to leverage technology, social media, internet banking, that's a great way to try and create a competitive value proposition against a traditional branch-based lending model. The other piece of it's going to be is as the market continues to evolve, consumers become more financially savvy. And time matters. The ability to say, I want to do my banking at 10 o'clock at night when I come home from a long days of work, as opposed to having to go to the bank branch and sitting there for an hour to get served. Those kind of decisions and those kind of thoughts start to permeate within the consumer base, and you start to see now more people gravitating around technology and using internet banking because of the fact that it allows for a much more ease of use and the ability for them to be able to do their banking when they want to do it.
Let me do a quick poll. How many of you are actually Chinese people, Chinese citizens from mainland China? 1, 2, 3, 4. Are any of you doing Hongbao on Alibaba this year? For your friends in China? Your niece or nephew or something like that? You are? Yeah. You are too. Anybody else?
Is that
no? That's a new product.
I know that's right. I own stock in Alibaba, so.
Oh, so you're glad to hear that.
Is that very
nobody's
common?
doing Tencent? Everybody's doing Alibaba rather than Tencent?
Alibaba is for wholesaler and AliExpress is for like a retail business.
Okay.
Learn something new. You're gonna rush to your computer and buy something.
Well, Tencent is actually, not Tencent as a company, but some Tencent executives are supporters of Yale China. So I like Tencent as a company. I recommend you all use them. Yeah, last question here, and then we'll break.
One last question. Do you find that it doesn't make a difference to the people in China, or does it, do they have a very welcoming attitude towards people that are foreigners and have to do with their bank? Or like, do people there feel that they want to have self-determination and they don't want to have any foreigners, and they would prefer, if they had a choice, to deal with the Bank of China, that kind of, Banks of China, that kind of a thing, specifically owned by the Chinese, as opposed to when a foreign person comes in? Or do you think that they really don't make any difference? Is the name of the game, for lack of a better word, just giving good customer service and they don't mind where the bank has originated from, kind of a thing?
I would say that it varies based upon geographic location. It varies based upon financial savviness. It varies based upon products. So, for example, some of the foreign banks have done fairly well in investment or wealth management products, and that experience has performed well in terms of entering into the marketplace. Where you look at, for example, credit cards, where, again, historically, to repay your credit card, if you don't have a lot of the ability to do online banking, it's going to require you to go and make payments in a branch. As a result, the consumer is going to think about that, and they're going to say, well, if I need to do that, I need to have a model or a product that's got ease of use, because I've got to make sure I can repay my credit card loans. So it varies based upon financial savviness in terms of welcoming of something new and different. Clearly, if you look at the retail space, there are a number of examples of companies that have come from overseas and have done tremendously well because of that brand, that global brand presence that they have. And it resonates very well into the Chinese market. And from a financial services perspective, there are select products that today resonate very well because they make a decision based on what's my return? What can I get in terms of my return on investment? And if the numbers make sense and they're financially savvy, they make a good buying decision. So it's evolving. I'm sorry?
Which products?
Wealth management, I think, is probably one of the critical ones, the key ones at this point. And it's also reflected in one of the presentation pages I had here in terms of where we see the rising demand. Investment products, wealth products are probably the bigger ones at this point. Mortgages on a smaller basis, more so, consumers in China are going to look for their local Chinese bank for mortgages, as opposed to 30 years, 40-year type of mortgage loan. They're going to think about staying power and who they know and who they've banked with in the past, and that kind of approach comes to the overall discussion around where they're going to go.
Michael, thank you very much. It's been a great pleasure tonight.
Oh, thank you.
For you.
Thank you very much. I appreciate it. Thank you. Thank you very much.